Just let these last two in. What's up, guys? Hope everybody is well. Hope everybody's well. Monday, 20th of April, 8:03. Let's go. Right. So, what has been happening today? Why, where, how, when? Let's have a look at the conversation we went through yesterday. Yields, and obviously, this is one thing that we want to keep an eye on. Big spike up, big driver. Why? I've got an article here. No, I have not. Okay. So I had an article up, and it was basically what has caused this. Nothing's been, fired or escalated in that respect, but obviously the US have closed the Strait of Hormuz one end or blocked it, and then you got Iran obviously here as well. So they're basically stood there, staring at each other. Iran has classed this as it's a bit of an altercation from the agreed ceasefire in regards to they shouldn't block it. I don't know what is happening. I don't know why it's happening. But obviously, I've kind of had enough of it now, and I think the rest of the world has as well. But that's not something to get into. That's opinions, and opinions obviously can get you into trouble. So, so yeah, that is obviously why markets have opened the way they are. Escalation or minor escalation. That's how it's been treated. So, yeah, let's obviously have a look at what else has happened. So, what does that mean? Dollars pump is still, and this is why I've been a bit sort of timid into the market. So, dollars pumping or gapped open. However, we're stuck here. We're stuck at this 98, say 98, 300. All right, we've got this level here on the dollar. We struggled to break above it all of last week. We're kind of struggling around it. I do think that we're going to hit 98, 500. And obviously, why have I gone with the dollar this morning and why couldn't I have gone any other way? You can see here we obviously had big tail off on Friday. However, instant rebound. Markets have gapped open. And if you kind of look, it's not clean at all, but this area here is acting as a bit of support. All right. So what we've got to anticipate, is it a higher probability that 98 500 will be tapped, or is it a higher probability that 98 will be tapped? Well, obviously we've got escalation. We know that it's going to be de-escalation that's going to break us through. We've got a little bit of escalation. So we do have to err on the highest probability because obviously remember the only difference between gambling in a casino or trading is we can edge our kind of bets a little bit higher in regards to utilizing the data and going with the highest probability. And I always explain it's a bit like on a casino, if you got a roulette table and you've had black come out 20 times, you're going to keep on going for red until that obviously comes out. So we've got to be aware of that kind of scenario in regards to the highest probability is that yes, I'm not too worried about this. If we look at our gappage here, we do have this level here. All right, if I make that a different color, um, we do have this gappage here, which could potentially be retested. So that's kind of where I am at. Every single country economy is having the same issues. Inflation is rising. So obviously that is what we also have to be aware of here. And obviously if we look at oil, up 3.8%, holding. All right. So oil is a factor. Although we don't trade it, we can obviously utilize it in regards to, how's my market being driven? Because right now it's dollar, oil, yields. If they're trending to the upside, then obviously everything else, is going to be trending in an opposite direction. Even, look at the, stock market. When oil goes up, stock market goes down. All right. So we do have to utilize oil as the major factor here, and obviously, try and obviously work out how swiftly everything's moving. So it looks like there's, markets obviously gapped up. There's a little bit of indecision across all three. All right, a little bit of indecision in regards to yields. Obviously, it opened up here. Now they're trading within this range here. All right, oil opened up here. Now it's trading within this range here. All right, so we do have to be aware of this. And we've got to monitor how prices actually moving. Now, one interesting thing, I had a chat with someone from the inner circle. He'll know who he is. This morning about potentially dropping daily and in session targets at the moment because it's pretty hard. Times are a bit hard. It's not clean price action, so potentially drop them a bit. So Friday, obviously, I was running into a meeting. I've actually got one today, so I've mentioned him before. I've got a friend who's a risk analyst at the Deutsche Bank. He's been doing a lot of work in Japan recently, so I am very, very interested. I'm going to meet him. I'm actually going to play golf with him today, so this afternoon will be slightly different. I'm going to pre-analyze everything, but I probably won't have time to obviously put the charts in to the group a bit later on. So it'll just be the potential entries that obviously I am looking at this afternoon. So these are obviously, it'll be interesting to obviously speak to him because he's going to have a really good understanding of what's going on in Japan because he's been on and off there for the last year. And yeah, I really want to understand his kind of point of view on risk, at the moment. Have they dropped risk? Have they added in some extra conferences? So yeah, I'm going to rack his brains for 4 hours. I've got him stuck with me for 4 hours a bit later on. So yeah, so it might be a bit different this afternoon, but yeah, I'll obviously keep you guys all updated. So let's go for the two pairs that we didn't like. All right, one was yen. I really don't like where it is, right now. If we look at this on like a daily, the higher the time frame, the more kind of horrible it, looks. There's just no structure. All right, it's very, very hard. You could argue we're kind of making, lower lows, but then obviously equal highs, so it's very, very, messy. Kind of the only thing I will point out here will be a channel. So we could potentially argue that USD JPY is trading in a channel, but obviously, again, it's not clean. All right, so I only really want to be looking at trading this potentially in this area here, and potentially in this area down here. These would be the two areas which I'd be looking. Anything else is a little bit messy, and you can see obviously market, although it's gapped up, even on these pairs, it's opened up slowly. All right. Gold, another one here, hasn't really done a heck of a lot. Pumped obviously down instantly, came back up again, and now it's trading again in this kind of central area here. You can see here the kind of central, like a central reservation of a motorway. Again, you could argue, yes, is this trending to the upside? But it's making higher highs and then lower lows all at the same time. So again, this is kind of gold's in a bit of a scalping zone, so it's going to suit the copier really, really well. But obviously, it's not. There's just no trend here, so it's very, very hard. So the pairs that we have got here. So I've got GBP USD here. I kind of, because we've got the three slower pairs, I kind of want these moves here. I want the number two to be triggered. Let me just have a quick look. Yep, I've had number two trigger on Aussie, not quite yet triggered on pound. So, but it probably will. So I actually want this extra risk on my trades this morning. So yeah, that's, we'll wait and see what happens here. We obviously had a nice, obviously push. We've made a lower low, so obviously trend, should, that is our highest probability. If we were to map this out here, we've got something like this, and then we've made this, low here, so we should be coming into around this area here, and then potentially, looking to tail off to the downside here. That's what I'm kind of looking at. But I don't think there's going to be any big, moves happening. So probably pound has just triggered for me number two. Euro, uh, again, same. Number two has just triggered. I like the idea of obviously pound, strengthening. Pound and obviously euro have an indirect correlation. So if anything's going to move heavy, it's going to be euro. But again, me wanting to take on this extra bit of risk, I am happier with, I wanted to obviously have both of these trigger. And remember, we don't draw these, zones up here for no reason. We're happy if price is trading within this zone here. All right. So these are all things that we need to be aware of, and all things that we need to be happy with. So that is that one there. And then obviously Aussie, similar here. Um, Coming up to obviously test this gap here. It'd be interesting to, see. Um, so yeah, I'm like I'd said, I'm happy and comfortable anywhere within these, zones here. That's what we're planning. That's what we're anticipating. All right. So just want a bit of a release from here, and obviously then we'll be all, nice and happy. Now, that's another thing that hopefully you guys have noticed over the last couple of weeks. I've been reducing risks. So obviously our stops are a bit uh, tighter. We're obviously below 30 pips on all, so that's one thing that I, like to kind of do in times like this. I'd like to make sure that everything's, a little bit smaller. So we're just controlling everything. Right now it's a little bit of a snatch and grab, market where we've got to get what we can. And then obviously, hopefully, once this all ends, trend will come back, and obviously, it's very, very, very easy. So, markets aren't always, similar. So sometimes bit like now, you can trade them, but you've got to always have risk in the back of your mind. So it's not a time to go all out and out attack. All right, it's a time to just chill, and yeah, make sure that we're keeping our journals green. And obviously, even if it's not that, not that, much. Right, let's go through some of these questions here. Zoom user, when oil goes up, does gold react in the opposite direction as well? So normally commodities, all right, commodities work together. All right. So in a normal market environment, money will be flowing into commodities. So they tend to, move together. And then on the other side, you got, the stock market, because obviously that's where, stocks are obviously where the, money is being flowed. All right. Yes, we've obviously got oil stocks right now, which will be doing pretty well. So I've got a bite here. But obviously, we've got to be aware that, right now, this war wasn't supposed to be, but it's become all about oil. Everything is about oil. So if you imagine how normally in a war like Russia, Ukraine, or the, Venezuelan war, then obviously, you would imagine that obviously gold is the driver. Worry and fear happens. Everyone puts their money, into, safety. The safest thing, it isn't stocks, it's gold, because on history, gold has always continued to pump. Now, one thing that obviously we have got to be, aware of is that oil is like the gold in this war. All right, so right now, yes, it's going to be, the more this war escalates, the safest place to put your money is into oil. all right, because it's it's going to stick to where it's at. And because we're trading, like I mentioned, for those of you who didn't watch the live yesterday, watch it. Because obviously we're trading, probably still trading majority macros, but there's a proportion of politics coming in here. And obviously, with politics, you get lots of insider trading. So there's lots of inside information being floated round here. And obviously, that's why we've seen heavy buy and sell positions like 20 minutes before news coming out. Right. Alex, how much should we decrease our daily target in this slow moving markets? Currently, I have 3% per day. Well, obviously, 3% is quite a lot anyway, because you're targeting about 63% month, which is like you would be the best hedge fund on this planet if you achieve that. You know, so I would probably halve that. And especially in this kind of market, you want to halve it. And then obviously make sure that you are just protecting your, capital a bit, but still taking it over. No one's looking to increase their portfolios and their yearly percentages right. Now it's like that scene from obviously Wolf of Wall Street where obviously they're on the boat, everyone's holding on for dear life. All right, so and obviously just making sure that they can come out at the end and have a brilliant, last two quarters because quarter one wasn't too bad, but quarter two's been spoilt by Trump, basically. So yeah, does anyone have any more questions? Any more for any more? Happy to answer any. If not, we'll end it here. Um, yeah, and that's smash it. Yeah, no, no. I'll obviously like always, I'll come home. I'll update you. And obviously, yeah, it'd be really, really interesting. I'm more interested in him um, going to spending obviously a lot of time in Japan. He's quite hard to get information out of, but I'm sure within 4 hours I can spark something where I'm going to get something out of him. But yeah, so I'm playing with him this afternoon, so I think I'm teeing off about 1:30. So just as I'm going to post that's why I'll have everything all laid up and ready. I'm going to get there a bit earlier and prep. And then obviously let him win, yeah. And then obviously, yeah. So I probably won't have the pictures, up. So yeah, Zoom user loved the breakdown PDF you did. Really, really interesting. Yeah, yeah. You know what? I quite like doing lives with PDFs because obviously it keeps my structure, and it makes because yeah, I do tend to waffle on and I'll sidetrack off of everything. So I think having a PDF at the end just obviously gives everyone that bit of structure. So yeah, I'm glad obviously you guys enjoyed it. We're gonna smash it. But yeah, we just obviously got to make sure that we're a bit aware that it's not an easy market. All right, easy markets are trending markets. We are an all over the place market. So just make sure you've got one eye on making money and on one eye on just protecting your capital. All right. So right, have a great day, everyone. I'm going to keep you updated as always, and yeah, let's smash it. So have a good one, guys.